It's Tim Shea with the Shea Group Realty of Keller Williams in Beverly, Massachusetts. I am here with another freeze frame market snapshot for you. I've got some data that talks about how the market is doing in Essex County for single family homes, for condos, and also for multifamily homes. It's been a great couple of years if you're selling, and also opportunities if you're buying, but this new year in 2018 is starting off really good. So without any further ado, let's get into some of the numbers and what they mean for you if you're buying or selling real estate. First slide we're going to look at is Essex County single-family homes and condominiums. We're going to look at year over year, 2017 to 2018 for these specific same time frames, for in this case January, for single-family homes and condominiums in a multitude of key criteria areas. So in sales, we're going to see that actually sales are down for single-family homes and condominiums. This has not changed in any of the previous episodes that I've talked to you about how the market is doing. In any of the other freeze frame market snapshots, they all seem to be down from the previous year. So we're down actually 7.2% in sales. In median prices, this keeps going up. So in this case, we're up 0.5%, a slight increase, but the median price on properties keeps going up. So that's part of the demand factor going in, increasing the median price and the price per homes. Inventory, this is as of February 6th, we're actually down 22%. So we don't have a full month, whereas 2017 has a full month. But I think we're going to start to see inventory typically comes up in the spring. So if we talk about the spring market, technically the spring market starts January 1st of any year. But as you get into some of the warmer months, then you start to see activity come up. My thought process has always been, if you need to go ahead and sell your property during any of the winter months, historically most people take their property off the market. So you've got a lesser pool in that seller's market. So if you need to sell, you're a bigger fish in a smaller pond. I always say if you need to sell, it's not a bad thing to go ahead and sell in the wintertime. In this case, it's probably even better because there's a lot of buyers that have still been in the market for the last year, 2 years that haven't bought, and their radar is acutely tuned to what the market is doing. So in the wintertime and in these winter months is still a great opportunity to go ahead and sell. So let's continue on. Pending supply, we're actually down 6.5%. This means what's going to close in the next 30, 60, or 90 days. And in month supply, I'm not going to go into the definition because if you want to understand what month supply means, it's basically the differentiation between a seller's market and a buyer's market. Take a look at last month's freeze frame market snapshot. I talk about how you delineate a seller's market to a buyer's market. But we've been in a seller's market. The less inventory that there is in month supply of inventory, it means that it's a greater seller's market. In this case, we're at 1.6 months of inventory. It basically means that how long does it take the current amount of inventory to sell? And we're down 15.7%. So in total sales, we're actually down 5.1%, and this is due to the lack of inventory, the amount of buyers and the lack of inventory. Now, if we look at a year to date, and this actually goes back for the whole year, and we did talk about it in the last freeze frame market snapshot, in sales we're actually up 1.2%. That's at the end of 2017 throughout the whole year compared to 2016 for the whole year. Median prices were up 7.7%, and in total sales we're actually up 9%. So you can see how the market is kind of plus and negative in different areas and what that means if you're buying and if you're selling. So let's move on to the next slide, which is the same information but broken down into different segments, because that's the market as a whole, but not everybody fits into those same pockets. So what we've done here is we've broken it down into different price points. So the first price point we're going to look at is under $450,000. Now this is the same time period from 2017 to the same time period 2018 for January. So in sales for under 450, we are actually down 11.1% in sales. Again, that's due to the lack of inventory. Also potentially the time period that we're in. It's technically wintertime, and maybe not everybody wants to sell in wintertime, but remember what I just said about selling in the wintertime. Inventory, another factor that contributes to this, we're actually down 20.8% to about 387 properties on the market in Essex County for single family and condos. And in month supply, we are actually down 8.3%. So it's actually meant to be 1.2, and 1.1, I'm sorry. And this is the biggest reason why we are finding that a lot of buyers are running into the situation where they're running up against multiple bid scenarios. They're being outbid by people that have cash. It's because there is so little inventory. Almost everybody is bidding on the same properties in this price point. 450 and below is the toughest price point there is out there if you're buying in this market. Clearly, the lower you go, the tougher it is too. So there's a lot of different strategies that one can employ if you are buying in this market and in this price demographic. And I'd love to be able to talk to you about those. Some of the things you can do is you can waive some of the contingencies that might be out there. You can leverage the cash position that you have if you have that flexibility. You can tighten the days up that you have written into a contract, and you can use an escalation clause, which basically allows you to leverage the cap that you have in purchasing power if the property is under that value to go up in a staggered amount over the highest offer that there is up to a certain point. Some people get scared away by this, but it's actually a really good tool. And if your agent is not talking to you about that, they're really not employing all the tactics that are necessary to give you the most competitive edge in this market. I can certainly talk to you more about that. But let's move on to the next segment, which is 450 to 700,000. In sales, we're actually up 10.3%. So that's a good sign. There's more people buying in this price point. Inventory, again, we're down. It's just natural in the market, but it's also contributing because it's this time of the season. I do expect that to change. Excuse me. And in month supply of inventory, it's actually down 36%. That's meant to be 2.2. So we're down 36% in month supply of inventory. So now in 700,000 to 1 million, in sales we're actually up 28%, but if you notice the number's smaller, so that range is certainly not as big as some of the other categories. In inventory, we're actually down 23%, and in month supply, we're actually up 6.4. So in this market price point, it's a little bit it's elevating, it's alleviating the pressure on the market a little bit because it doesn't have such a low month supply of inventory. And then as you get into $1 million and over, things kind of normalize themselves right there. In sales, we're up 14%. And in inventory, we're actually down 12.4%. And in month supply, we're actually down 22%. But if you notice, we're down to 11.1 months supply of inventory. So that in and of itself is really a buyer's market. When you get anything above 6 months supply of inventory, that's technically a buyer's market. So people in this price point, 750,000 and above, but $1 million and above, you really have your choices to the properties out there. But if you also notice too, the amount of properties that are out there are by drastic amounts decreased compared to those other price points. Now let's look at the next slide, which is the last slide, which is multifamilies. Multifamily properties in Essex County is in the same boat. It's actually been probably one of the most competitive areas that are out there right now because there's a lot of people that want to get into the investing world. There's very little supply of these properties that are actually on the market. A lot of the makeup of these properties is circulated around off-market, by buyer to buyer, a seller to seller, and in close proximity to the investor and development world. So when you get properties that are put on the market, they tend to be very, very competitive. So let's look at what those numbers mean. In sales, we're actually down 22%. There's just not a lot of inventory right now. But in median price, we're actually up 13%. So look at that increase from 382 to 432 from 2017 to 2018 in this period. Most of that increase is just happened in 2018. So if you are looking to invest in 2018, you're going to be paying top dollar for properties unless you can find a steal or unless you can find maybe a foreclosure or a short sale or a pre-foreclosure property where there's a need to get rid of the property. Most properties that get onto the market are because the investors and the sellers want to capitalize on the appreciation in the market. And there's things that you want to look at if you're getting into the investing world, things like cap rate, return on investment, things that you want to look for as it relates to condition of property that differentiate a little bit when you're talking about single family or condos. I'm happy to talk to you a little bit more about those as well, but let's finish off with these numbers here too. In inventory, we're actually down 35%. We're down to 86 properties in Essex County. So that just shows you how tight this inventory is. And in month supply, we're actually down 15% to 1.1 month supply of inventory. And in total sales, we're down 19%. And if we scroll down to the bottom, yearly MLS sales, this is for 2016 to 2017. You'll see that median price rose, like we talked about before, to 408,500. That's up 10% from the previous year. And in sales, there's 1,102, which is also increased as well. That's 7.2%. So again, what do these numbers mean? It means that if you're selling in this marketplace, you're pretty much guaranteed, if you're under, say, 600, 500,000, that you're going to have competition for your property, even if it's a little overpriced. You're going to have a lot of competition. And if the property is underpriced, which often happens in this market, to go ahead and gain a little bit of a competitive advantage, it's going to be even tougher. So if you're buying, what does this mean? It means that you're going to run up against what are called multiple offer scenarios. There's different, situations and happenstances that occur with those type of offers. It's not as simple as you put in there your acceptance date and when it's valid. A lot of times the fiduciary responsibility should be to the seller if you're a listing agent, and if they're posed with the positive opportunity to have multiple offers in hand, what they may do is come back and ask everybody to give them their best and final. So it may elongate itself as it relates to the process, but I'd love to talk to you a little bit more about what you can do to be competitive if you are buying in this marketplace. So I hope those numbers were helpful. I hope the information surrounding them was helpful. You know that if you need any more information on all of these stats that I went over about any single family, any condos, or any multifamily properties that are currently on the market, and what you can do to be competitive if you're selling and if you're buying, you guys know you can always find the guy that's the cartoon at MrLista.com, or you can call or text me at 781-789-5128. And until I see you out there, happy house hunting. Bye-bye.